What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today, I'm going to talk about trading rules versus trading instincts. I know many of you have rules for your strategy, but you have instincts. I remember at the beginning of my career when I was building my book, learning how to trade, and I looked at all of the great traders that I knew on the trading floor, read about a bunch of great traders, and I saw all of these different trading rules. So I started writing them all down on my notebook, trying to get what I felt were the best rules for my trading. And what I figured out was when I finally sat down and started to trade, I was overwhelmed by the amount of rules that I had. And I ended up not even using half of them. And I have to go back to a piece of paper and try to figure out what some of the rules were. And I recognized in that moment that it's important to have rules for a strategy, but instincts for your trading. And at that time, nearly 20 years ago, hard to believe it was that long ago, I wrote down 9 trading instincts. And today I'm going to share those 9 instincts that are essential to my trading. And I think that could be of great use to you and your trading. But before we get into talking about trading rules versus trading instincts, I want to remind all of you that micro treasury futures are now live. And if you do any macro homework like I do, a lot of macro traders are keeping a very close eye on yields and yield curves lately as a leading indicator for markets. So some of the products that I'm regularly looking at lately are the 2YY, 5YY, 10Y, and 30Y. To learn more about micro treasury yield futures, go to cmegroup.com. Futures Radio Show is sponsored by CME Group, Trading Technologies, otherwise known as TT, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 futures symbol RTY and micro E-mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. All right, everybody, let's go over the 9 trading instincts that I developed nearly 20 years ago. First instinct, be yourself. Sounds easy, right? But so many traders, myself included, I went through this, try to be like other traders. Why? Because other traders that are successful, we think if we try to be like them, that we'll be successful. I stood next to the best traders in the world in the S&P 500 pit, and I lost money. Why? Because I wasn't myself. I didn't go through the process of learning about myself and how I was going to be as a trader. So the first instinct we must have is be ourselves. What am I going to risk today? What am I going to risk per week? What am I going to risk per month? What type of style trader do I want to be? What type of indicators do I like? Make your indicators your own. This is so important because in order for you to be truly successful in trading, as I say on my Twitter page, trading is a journey of oneself. Is you've got to go through the process of learning about yourself and what works best for you. So the first instinct we always have to have, because we're in a world we're overwhelmed by how much information we're getting, and it can push us in all sorts of different directions. So the first instinct is be yourself. Next instinct is trade according to risk. Everybody focuses on entries. That's all everybody focuses on, really, especially new traders. Where should I get in? But they don't talk about where they're wrong. What's one of the first rules we learned as pit traders? And this still pertains to electronic trading. Second trade first. My mentor, Mickey Hoffman, one of the first things he taught us was second trade first. Know where you're getting out before you're getting in. So therefore, the most important part of my entry is really my risk price. So I look at entries a little bit different. I know a lot of people like a single price entry. I don't look at it that way. I look at a range of execution. And when I have that range of execution, I trade according to my risk price. So wherever I'm wrong, that is where I'm going to be focusing on executing my entry. What do I mean by that? If I'm wrong, let's just use the S&P 500 as an example. If I'm wrong at, let's just say, an easy price of 43.50 and I get an entry at 43.60, that's 10 points of risk at 43.60. Let's just say, for example's sake, I could risk $500 on a trade. If I buy one at 43.60 and sell one at 43.50, I can lose $500, one contract. Now, I know there could be slippage, so obviously the stop could go further, but in a perfect world, let's just say that's the case. Well, I don't think that every trade is the same in terms of entry. Every contract size shouldn't be the same. It should be a risk price. So to me, when I think about managing risk, and everyone talks about this, it's about how much can I afford to risk and how many contracts that I can trade is based upon how far away I am from that risk. So for the 43.60 to the 43.50 example, if I buy at 43.60 to 43.50 with my stop, I could risk $500, one contract. But if it goes to 43.55, I can buy how many? Two. If it goes to 43.42 and a half, I could buy four. So risking the same dollar amount, but different contract size. So everybody follows on this one single contract size, one single entry. And to me, that's not really trading, because you're basically set to automate your strategy. If you already know exactly where you want to get in and exactly where you want to get out with the exact contract size, then you should just automate it. I'm a big believer in that. But if you're going to be a discretionary trader like myself, you need to have a range of execution. Now, I'm going to use a quick example of this 43.60 to 43.50. If the market is trending lower that day and you're buying a dip, and I have this 10-point stop from my entry at 43.60, what I'm going to look at is I probably want to buy below my 43.60 entry and try to accumulate more contracts because the trend is down. So therefore, on a downward moving market, on a buy, I'll try to buy as close to risk as possible. And the one thing that will never change is my risk price. My risk price is 43.50, period. My entry, that doesn't really matter to me because I have to see what the environment is. I have to see what's happening in the market, how volatile the market is. I know how much I can afford to risk. And in this specific situation, if I'm buying a dip on a downward trending market, I'm going to try to buy as close to my risk price as possible because I think that there would be opportunity to get in lower because it's a downward intraday downward trending market. So it might go and trade near my risk price. Now, I don't want it to, but I'm going to execute accordingly. And like I said, then I'll look to scale. Let's just say, for example's sake, the market spikes down to 43.55. Now I'll buy one. I know that I can afford to buy another one there because I have $500 of risk. But let's just say it goes to 43.44 next. I might buy another one. Now I've got 5 points of risk on one, 4 points of risk on the other. So I'm risking $250 on one, and I'm risking $200 on another one. That leaves me with one option left. I could buy one more contract if what happens? We get within $50 worth of risk, which is 1 point above the 43.50 stop. So I could buy one at 43.51. Now, who knows if that's going to happen, but that's the way I'm trading according to risk because that's all that matters to me. My entry price does not matter because I'm always going to trade around it. And there might be an example on a different day where I have 43.60 as an entry and it stops at 43.61 and I can't get in because it's too expensive. It's $550 worth of risk. And there might be a day where the stop is 43.55 and we get to 43.60, stops there on the dime. I don't get filled at 43.60, but now instead of waiting to get filled at 43.60, I know because my stop is now only 5 points, I could buy at 43.60 and a quarter, 60 half, 60.75, 61 even. Because why? I'm trading according to risk. I don't believe in being held by an entry price. I believe in being held by a risk price, and my contract size will determine that. Instinct number 3, always be a student. I wake up each and every day as a student. Why? Because each and every day, trading is a journey of oneself. I'm learning about myself. I'm learning about the market. And every day, you will take what you've learned about yourself and the market and use it in the future to become a better trader. In my years of doing this and interviewing lots of people, gosh, it's got to be near 1,000 people I've interviewed at this point, traders. I would say one of the most common traits that they all have, and this is instinctual to them, is to wake up willing to learn something new, willing to get better. They never think they have it figured out. I've got news for you. Nobody figures this business out. You will be humbled on day 1 and day 1,000 and day 10,000. That is just the way trading works. So if you come into it with the mentality, the instinct to be a student each and every day, you will get better. Instinct number 4, react with reason. Boy, this sounds so easy, does it, folks? React with reason. Anthony, I always react with reason. But is the reason because of something you put into place? Or is it because something happened and you're just trading now? We've all been there. How many of us have seen a market get to a price that we're like, hey, this thing is way oversold or way overbought? I could use an example of a time where I remember Crudele was getting crushed. And I'm looking at it going, man, this thing is down $5 for what? There's nothing going on. I step in and buy it. And before I even knew it, I was adding to a position and the thing was just tanking. Before you knew it, it was down $10 and I got totally crushed. Why? I didn't react with reason. And I ended up puking near the lows. Market came back and I had absolutely no reason to do what I was doing, but I did it. We've all been there. We've all done it. And this is why a lot of traders will blow up. This is overbought. This is oversold. And they just step in to look for the quick tick. And next thing you know, they're just blowing up. This to me is so important to be an instinct. Before you're getting ready to push that button, and I love to push buttons, you have to look around and say, did I put this reason in place? Is there something there in front of me that told me to do this trade? What have I said on Twitter a bunch of times? One of my most popular tweets since I've been on Twitter is, great traders don't force trades. Great traders are forced to trade. That is react with reason. You need to be forced into the market. If you try to just do something because the market's doing anything without any reason behind it, this is why people blow up. This is why traders don't last very long, because they don't react with reason. This needs to be an instinct. Instinct number 5, be aggressive. Everybody talks about managing risk, right? And that sounds very defensive. But to me, managing risk is also about understanding the situations, the conditions, the environment, on when to be aggressive. If everything's working for you, you're making money, your strategy is just point on point, your execution's flowing, you're in a good mindset, be aggressive. I have learned that in this business, it's about seizing moments. Lions don't hunt every time that they see prey walking by. They wait for the opportunities to be aggressive. They don't want to burn energy at that specific time because they don't feel it's an opportunity to be aggressive. Think about it from a lion's perspective. How much energy in a day do they have to spend on hunting? And when they do spend the energy on going after prey, they go after it 100%. Why do they do this? Because the situation is presented in front of them. That's the best time to go after it. That's the time that they can make the kill. As a trader, it's the same way. When everything is lined up for me, I go at it full throttle. Now, sometimes it'll bite you in the shorts. That's part of this business. It's going to happen. But understanding yourself, understanding the environment, understanding the situation, and if it's presented to you to be aggressive, you have to take advantage of that. Think about how many times the market takes advantage of you. How many times you've been in a weak moment and the market just puts its foot on your back and pushes you down and takes you to a new all-time low. We've all been there. I've done it. I've experienced it. It sucks. But you know what? I remember that and I use that as fuel. And I say, you know what? That wasn't my time. Things weren't working good for me. Mentally, I was in a bad place. The environment wasn't conducive for me. And I learned. And when the market was giving me what I want, I was taking that feedback in saying, this is the time to take. I take more and I take as much as I can. And that gives you the opportunity to stay in the business for when times aren't so good. And then you don't feel like you need to force it. This is a big part of where I believe this is where you become an artist. There is no real perfect example of when to be aggressive. This comes down to a lot of things happening for you really getting in that mental and statistical and technical zone where everything is working for you and you're seeing everything the way you want to see and you just do it. You slow things down and just do it. Must be aggressive instinctually.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated and it takes time, except with TradeStation Crypto. Because we are not an exchange. We are a broker. You have access to multiple pools of liquidity. All in one platform, in one account, one way. Trade crypto your way. Plus, earn interest on your eligible cryptocurrencies. Get started in one click.
Instinct number 6, get out of your losers. How many of you sat on a loser longer than what your risk price was? We've all done it. I've been doing this for over 20 years. It still happens to me. Not often, but it does happen. And it's because we allow the market to take advantage of us and our emotions, our hidden biases all get in the way of our risk price that we put in place before we even got in the trade. What did I say? Second trade first. This is why instinctually you have to learn to get out of losers. This is something I've embedded in myself. I've talked about how many times in my past I've had just bad days that turned into really bad days because I didn't get out of my losers. I look at it this way. If you develop an instinct to just get out when you know you said you were going to get out, you'll just do it. One of the biggest keys, I would say, to me getting better at trading was having this instinct. Just clicking out. Here's my risk price. It got there. Oh, yeah, I didn't have my stop in. Just click out, man. Get out, right? Hit my limit for the day. Click out. Get out. You're done. Move on. You walk away for 5 minutes, how much better I feel. But in the moment, you're sitting there and you're fighting it. Like I said, those demons, those hidden biases. I don't want to cover this loser. I don't want to walk away as a loser today. Very difficult. Definitely one of the hardest parts of trading, if not the most difficult part of trading, is accepting loss. If you remember my Chat with Traders interview, at the end, he asked me if there's one thing you could say to the traders out there that may be a lesson in my life. I can't remember the exact question it was, but it was the best advice I could give other traders, and that was learn how to lose before you can win. Because I'm a competitor. If you're listening to this, you're looking to get better. We all want to compete. We all want to win. We all want to be great at trading or whatever it is that we do. Nobody likes losing. Sucks. Losing sucks. But it's a part of this business. So instinctually, you have to build this in because in the heat of the moment, you're going to be tested. You're going to be tested at clicking that button and getting out. Now, some of you will always work stops. Some of you will work stops sometimes. Some of you may never work stops. I think that's a personal preference. I, majority of the time, probably 95% of the time, work stops. Sometimes I'll click in and it gets to my stop so fast because it's such a bad trade that I have to just click out. Once again, this is why you need to have an instinct. And also instinctual to not move that stop when it gets near your price. Such an important part of growth. Trading is a journey of oneself. Understand if this is a weakness of yours, because I think it's a weakness of all of ours. Nobody likes getting out of trades that are a loser, and nobody likes to stop trading for the day because they're losing. Build it as an instinct. Think of it as an instinct, and that will help you handle it in those tough moments. Instinct number 7, never let winners turn into losers. What do I mean by this? It doesn't mean buy something and then it goes your way 2 ticks and it goes against you. You get out right away and you say, "Oh, I let this winner turn into a loser." It doesn't work that way. The way I look at never let winners turn into losers is when a market has given me equal to what my risk price was, what my risk amount was, I tend to take some off. I don't let something that I was willing to give to the market and the market gives me turn into where I end up giving the market. Because in my mind, that defeats the purpose of what I'm doing. My goal is to take from the market, put a set amount that I'm willing to risk out there on the table or however you want to look at it. And if the market gives me that back, I better be taking something. Now, not all the time am I going to get out of that position because that's just not the way it works because my targets may be much further. What I'm trying to do is protect myself from turning a winning situation into a losing situation. How many times have you been out there where you've had a good day or the market's giving you everything you've wanted and you've turned it into a losing day? How many times? I mean, I remember my risk manager saying to me, "Anthony, you're up X amount every morning." He's like, "And by the end of the day, you're giving it back. How much more do you want?" And I'd be hitting my goals. Agreed. Or I was in a really good trade and it went my way exactly the way I wanted, a few ticks away from getting covered on the position. Next thing you know, it's even or down money. I'm adding to it. Now my day is a total mess. If you haven't done it, you'll probably do it at some point. And this is why I say it has to be an instinct. Now I know. I can think of recent times where I've done everything right. It went my way, great, crushed it. All of a sudden, I'm starting to give everything back. In the pit of my stomach, I'm looking at it going, is there reasons to cover here? It got so close to where I was looking to get out, analyzing it, and boom, right away, it had to be an instinct for me to not let this winner turn into a loser. Because not all the time are we going to get the exact prices we wanted. This is trading, right? But sometimes when the market gives us something, exactly what we were willing to give it, do we really want to give that back? Do you want to give back a winning day? We all know the answer to this, right? This is why it has to be instincts. And you all know when you're making this mistake that you should not let this winner or this winning day or however you want to look at it at that moment turn into a loser because you know how you're going to feel afterwards. And after you've done it, you will realize why it needs to be an instinct. Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. Instinct number 8, know when to stop. I put this Kenny Rogers up here. You got to know when to hold them, know when to fold them, know when to walk away, know when to run. If this isn't trading, I don't know what is. And I remember one of my mentors saying to me after a day where I was up money and I was hanging my head down and I was walking down the hallway and he said to me, he's like, Anthony, he's like, "What are you hanging your head down for? Did you do okay today? Is everything all right?" And I remember saying to him, "Yeah, I only made X amount." And he looked at me and he said, "There's a guy who's made a lot of money, millions of dollars." He goes, "You never, ever be embarrassed to be up anything." He goes, "You should go home now. Think about that. Think about where you are, how hard you've worked to get here." And I thought about it and I'm like, my mindset at that moment was just poor and I needed to just walk away from the market at that point in time. It taught me a lesson for not only in those moments, but for multiple lessons when I wasn't feeling well. Should I be really trading? You sit down, you lose money. Now you're even pissed off. Something happens in your family. God forbid, right? Something happens before the open or during the trading day and you go back to your trading machine. You're not focused, right? Think about it. Lately my dog been going through some stuff, my poor little baby. And I know sometimes I'll sit down at the screen. It's all I could think about is what's going on with her. And I just say, you know what? You got to get up and walk away. And this happens with all of us. Are you really aware of your feelings? Do you have good self-awareness? Because this is one that's going to indicate to you to stop. You all know when to stop. Are you doing good on a day and all of a sudden the market turns into crap and you're sitting there going, Well, I'm going to try and make an extra $200. This is kind of goes back to don't let winners turn into losers. And next thing you know, I remember a time where I was up $800 thousands of times, really, where I was up $850 or $940 something dollars after commissions, and I wanted to make $1,000. I tried to make an extra $50 to get the whole day back. I mean, know when to stop. We're all aware of this stuff. This is not something that is a rule. This is an instinct. If you have good self-awareness and you spend the time every day being the student, learning about yourself, you'll know the times when to stop. But do you follow it? But if you tell yourself it's an instinct and you start letting it become part of you, you'll walk away. So much of this business is in the heat of the moments. What decisions do we make? That's it. That's a huge part of it, if not everything. As a new trader, you haven't experienced it enough, or something hasn't pissed you off enough to where you finally committed to just walking away or whatever it may be in that situation. The more time you have in this business, the more you recognize yourself in the situations. That's why it's got to be an important instinct in your trading to know when to stop. Instinct number 9, last one. Boy, this is really a big pet peeve of mine. Everybody says be disciplined as a rule. I don't look at be disciplined as a rule. I don't. I look at it as an instinct. Why? Because be disciplined is about more than just being disciplined to your strategy. It's about being disciplined to your entire lifestyle as a trader. They're all connected. If you don't know this yet, you will. And for those veterans out there listening to this, know exactly what I'm talking about. When something is happening over here in your life, it carries over into your trading. If you're undisciplined here, you'll be undisciplined there. It's just the way it is. They're all interconnected. So I look at being disciplined as much bigger than being disciplined to a strategy. It's about being disciplined to my lifestyle and the way I approach my trading business and my trading life. This is a huge part of our life. It's not just what we do, it's who we are. And if you understand that and understand all the different things that are intertwined in our life, you will see that be disciplined is so much bigger than just being disciplined to a strategy. It's being disciplined to everything in your life. Final thoughts today for trading rules versus trading instincts. It's very simple for me. Strategies require rules. Traders require instincts. You need to have both. Rules for the strategy, instincts for the trader. In my experience, how you really get to the next level is not by the strategy, it's by the instincts you put in place for you to develop as a trader. I look at Tom Brady as a great example. Strategically, he's excellent. He's my favorite athlete. I have a ton of respect for Tom. I think he's great on so many levels. But when I look at him and I say, what makes Tom special? And I think Tom's instincts are the best. I think he focuses on that aspect of the game more than anybody else. Because in the heat of the moment, he is in control. He is present. He is relaxed. Why? He's obviously prepared, and that's a huge part of it. But it's because he looks at the situation and instinctually he knows what to do with the ball. Just because a player's open or something is happening on the play, on the strategy, he doesn't just throw him the ball because the strategy says it. He instinctually knows how to handle the situation. Because not every strategy in every market condition, in every market situation, the strategy may not always be the exact right thing to do. It's about how you handle that situation. I could be wrong in a trade and instinctually step in and as a trader, make money out of it. How do you do that? Because instinctually, I knew that was a poor thing to do right there because I'd been in that situation before. I recognized the situation and I went and did something else. Because instincts need to be in the moment. In the moment, when you're there, so much about this business is about how we handle moments, right? It's not just about getting a good strategy. If everybody was making money because they had a good strategy, then all we'd have to do is find somebody out there that has a good strategy, give it to me, I'll trade it, make money. Why doesn't that work? Why doesn't that work? It doesn't work because that trader doesn't have good instincts in executing it. In the heat of the moment, they make a lot of mistakes. They're not very present. They're not very self-aware. This is what separates fair and good to great. And if you want to be great in this business, you need to develop trader instincts. If you enjoyed today's episode on trading rules versus trading instincts, give me the thumbs up on YouTube or leave a 5-star review on iTunes or anywhere where you're listening to this podcast. If you didn't enjoy today's show and you're watching on YouTube, give me the thumbs down, but tell me why in the comments down below. You could also DM me on Twitter. My DMs are open at Anthony Crudele. And don't forget to check out Instagram. Got a lot of stuff going on Instagram these days. You can check me out at Anthony C. Crudele. That does it for today. See you guys next time. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.